Hey, everybody. Welcome back to another episode of What's Going On in Banking. I am Ron Shevlin, Chief Research Officer at Cornerstone Advisors and author of the fintech Snark Tank blog on Forbes. And here today, as always, with my colleague, Stacey Bryant. Stacey, how are you doing?
I am fine, getting over these allergies, but you know what? I think I mentioned this to you earlier this week. New York Knicks are up, and Celtics try to take them out. Sorry, Ron, you're going to keep hearing this up until this game tonight. So just like these allergies, Celtics are not taking me out either.
Good. And Stacey's on the road these days, or will be on the road?
Yeah. I am getting ready for next week. It is the Cross-State Credit Union Conference in my neck of the woods. So all the credit unions, for the most part, of Pennsylvania and New Jersey, hitting the road next week, and super ecstatic. That's going to be a nice little road trip, a couple of hours drive, and you'll see my Stacey on the road post, Ron. I know you love those.
I do, absolutely. I'll be on the road myself until the end of May. I can't wait till June when I can start being at home again and get some real work done. Speaking of real work, let's talk about some of the hot stuff that's going on in the industry, Stacey. I think this week, LinkedIn at least has been totally obsessed with Chime's release of their S1. I've got a lot of opinions on it, but I'm going to let you kind of jump in first. What were your thoughts on Chime and their S1?
Man, listen, Chime just dropped their S1. I think their ticker, I already started looking at it. Their ticker symbol will be CHYM. And that's like a big old sign saying we're coming for your customers. So I always like to speak in the community bank or community credit unions point of view. And these fintech folks, they are not playing. Like Chime's out here with like 8.6 million active users. 67% of them treat Chime like their main bank. That's not just a digital bank, that's a digital takeover. So like Chime, it doesn't have any branches, no lollipops for kids, Ron, just a slick app and partnerships with banks like the Bancorp and Stride. And they're saying, wait, hey, look, we're a tech company, we're not a bank. But you know what that means for us. And I say us again from a community bank and credit union's perspective, they're eating our lunch and calling it innovation. So I see like Chime's IPO is about to bring them a truckload of cash to invest in more tech, more marketing. I already see the marketing on on Instagram and social, all over, even on commercials when I'm watching TV. So more ways to make banking feel like ordering takeout. And they're doing it all with no overdraft fees, no monthly fees. They're just swiping those cards and raking in interchange fees. So if regulators ever close that loophole, maybe they'll slow down. But for now, it's a money machine.
Stacey, I got to be honest. I'm not sure I share your optimism about Chime. There's a couple of things that really kind of stick out to me. And I got to be honest, I've kind of had a love-hate relationship with Chime for more than 10 years. I think I've written on both sides of the coin that I've loved what they're doing, especially around product innovation, but I've always felt like this is not as great a story as they would love it to be. A couple of things that I would share. Number one, yeah, I saw the S1, 8.6 million active members, growing plus more than 20% over the past couple of years. First reaction is, hello, Chime claimed to have more than 8 million accounts back in 2020. Or was that just downloads they were counting? Or maybe it was total and not active members or customers. I think the likely story here is that a lot of people downloaded the Chime app and Chime counted them as customers or whatever, or they opened an account and didn't fund it. Matter of fact, Stacey, just did some consumer research a couple months ago and asked people who have digital accounts, not just Chime, but neobank accounts, why did you open up an account? Number one reason is to get rid of fees, which is exactly what Chime's big premise is. But the other big reason, 40% of consumers who opened up digital accounts said, just trying it out to see what it's all about. I saw a LinkedIn post the other day, some guys writing that they grew because of cheap referrals. Did you see how much money Chime has spent on sales and marketing in the last 3 years? $1.4 billion, which puts them in line with what a $500 billion bank like TD would spend.
Right.
I think they're relying way too much on interchange. I think you're foolish if you're betting your business on that. And I got to be honest, I just they make their money by serving low to middle income consumers, and I don't see how you make a lot of money by serving people who don't have a lot of money.
Ron, but isn't that the whole point of, you mentioned these astronomical numbers and they're astronomical. But isn't that the whole point of adoption? Isn't that the first phase? The first phase of let's get these accounts, let's cause as much attention. And now being able to pump more marketing dollars and being able to be a bit more prescriptive, now the adoption begins. Isn't I mean, from a Chime's perspective, isn't that the hope?
Well, what I think that you're getting at, and you are making a really good point. If you go back to Clayton Christensen's Innovator's Dilemma, the innovation that he talked about wasn't somebody inventing something totally new. The disruption happened by finding unserved niches of a market and growing from there. And to a certain extent, that's what Chime has done. They've gone after that under or perhaps even unbanked customer, low to middle income consumer who, as much as the banks will say that they want to serve, and even the credit unions will say they want to serve, they don't. They don't serve them. That's not been the case. But the question then becomes, how do you then expand from that low to middle income consumer base? Do those low to middle income consumers, because they're young, mature, start making more money and stay with Chime? Or do they make more money and say, I'm done with Chime, now I'm moving on to somebody else?
Right. And I think, I don't know, this makes me think, and I'm going to just intentionally switch gears with even, Capital One and them swallowing up Discover. So like, again, I'm envisioning, I'm a CEO, I'm sitting in my office, I'm sipping on my coffee, and I hear that Capital One just got the green light to swallow up Discover. So let me break it down and let you kind of get a taste of how I'm looking at it. It's like you're running your little neighborhood barbershop. Suddenly Walmart moves in next door and starts giving out free haircuts with every TV purchase. So, your regulars love you. Listen, I've been at a branch. I worked out of a branch for years. I thrived there because I do know that I changed lives in that relationship. But you also know that some folks are going to be tempted by that big shiny sign that those, everybody welcome deal. So I really look at it, Ron, as far as it's only time will tell. But right now, these big headlines, it's from a community shop's perspective, it's like a big fish, bigger pond. So again, Capital One plus Discover. These are mega banks with national reach, deep pockets, tech muscle. They're about to flood the market with new products, slick digital tools, and probably some sweet sign-up bonuses. So competing with that on price and tech, that's like bringing a butter knife to like a lightsaber fight. I think about deposit wars. I think about tech pressure. So again, it's a lot of money, but there's a lot of intentionality there behind what can absolutely happen. And I'm just thinking about this. I don't want to go down a rabbit hole, but it's like you can't out Walmart. So, but you can be the best damn barbershop in town. So focus, to your point, when niches, focus on what makes you special, real relationships, local knowledge, service with your soul. I certainly service with my soul. I enjoy and love what I do, but don't sleep on tech find partners. Get creative, keep your edge sharp, and otherwise you'll wake up one day and all your customers or members will be getting their haircut at the self-checkout. So that's how I look at it. It's like, yes, a lot of money being pumped in. Yes, find your niche, but you have to know what's happening and seize opportunities with fintechs if you're a smaller shop to gain that traction and then intersect it with that community culture aspect of it.
Yeah, I think I see the Cap One deal. Well, first of all, I see it as less threatening to the community institution market as you're making it out to be, and possibly because, well, first of all, you've always had Chase, Wells, American Express out there already. So Capital One is already a mega brand in the credit card space. I think this is an interesting deal because I think, but basically, who should feel threatened here is Visa and MasterCard,
Mm.
because the question then becomes, with a new network and a new platform for Capital One, will they migrate, and how fast will they migrate their payment volume to the Discover platform? And then second, will they actually make it competitive and attract a Chase, a Wells Fargo, a Bank of America, or maybe there's actually opportunities to attract the mid-sized institution market. This could be a positive for them, Stacey, not a negative, if they compete with a Visa and MasterCard. So I was kind of surprised. I mean, I don't think this deal would have gone through as it did if a Biden or Harris had been elected instead of Trump. I think the regulatory environment made this a lot more possible. But it wasn't ever to me about the credit card volume. It was always about the network.
Ron, I don't want to beat a dead horse here. I look at it now more than ever. Listen, I'm on the road and I facilitate strategic planning sessions with CEOs for, I want to say, maybe average of like 500, 700 million up to like maybe 5 billion. That's like my average. And they're all saying the same thing. They all get intimidated they bring up Chime, they bring up these large fintechs, they bring up not being able. I think they're like what is it? Analysis and paralysis. They're thinking about, we can compete with them, so what now? And I think that I think that these headlines, although it's important to know where they can yield with these acquisitions and these filings, so to speak. I think I always bring it down to what, on a community level, what can be done. And what can be done is focus on these tech assessments, focus on your niche. We say the same thing all the time. And if you focus on, again, knowing your customer's name, knowing their kid's name, maybe even their dogs. Big banks use algorithms. We use at the community level handshakes and real talks. Ron, I would never forget being a consumer lending underwriter and a branch manager, and I had this person who could not qualify for a loan per their credit report. And as I understood their story and I knew exactly what was happening, I think they were like going through a divorce and something. I think their kids were off or they were sick and they couldn't work for X amount of time, and their paycheck didn't reflect that. So kind of putting this story together and making it make sense, understanding that people to person-to-person interaction. We were finally able to approve that loan, and that it created so much member loyalty at the time. I was at a credit union, and it drove more and more and more membership. So I think, we're having these conversations, and I look at it from great that these acquisitions are happening. Let's keep, from a community level, let's keep in mind of what's happening at a greater scale. Let's not be paralyzed by what's happening, and let's focus on what we can control. So that's it for me when it comes to these big boys here.
Yeah, there's something you said that I really latch on to, and it was the comment around focus on your niche. I think, though, Stacey, the challenge for a lot of community-based financial institutions is that their niche is no longer a defensible niche.
Mm.
Community as a geographic construct is simply not defensible anymore. And it's ironic that many credit unions over the last 20, 25 years have shifted from a seg to a geographic, to a community-based charter. And I think in retrospect, they hurt themselves by that. They thought they were expanding their market, but now 20, 25 years later, find that that's not a defensible niche. So I think kind of going back and figuring out where that niche is. And the funny thing is that you look at a Chime, they got a niche too. It's called low to middle income consumers who don't care about physical presence. Although that's not really true, because I can tell you from the research we've done, Stacey, almost every Chime customer, and actually I shouldn't say that, because there is a specific percentage, and that percentage is pretty high, that have other banking relationships other than Chime. So why is that? Well, because they need a security blanket of being able to walk into a branch and have somebody to talk to. So it's funny, everybody other than the top 10 banks is really fighting over niches. And for a community-based financial institution executive team to say, well, Chime is eating our lunch, I don't buy it, because unless you're simply going after low to middle income consumers under the age of 30. By the way, can we make one more point? Can I make
Yeah,
one more point going back
yeah,
to Chime?
yeah.
Because I've seen this in the consumer research we've done, and there's something else that kind of supports this. I'm seeing generational challenges that Chime is having. They've done very, very well with both the millennial segment, and by the way, pretty damn well with the Gen Xers as
Oh, yeah.
well. But the Gen Zers, much, much less. If you look at YouGov's study on customer satisfaction, Chime is in the top 10 for both millennials and Gen Xers, but not in the top 10 for Gen Zers. So I'm thinking even Chime's got some headwinds as the younger population comes in.
Well, guess what? Younger generation, younger generation thrives now in open banking. And I'll say this, and I'll read Penny Lee's quote right now. She's the president. Well, they are the president of Financial Technology Association. They said this is regarding the intention of vacating Rule 1033. That vacating it isn't handout to the biggest banks who are trying to limit competition and debank Americans from the digital financial services they want to use. It is a missed opportunity to further financial innovation. Americans must have a right to control their financial lives, not Wall Street. And let's keep it real, Ron. The CFPB's 1033 rule was supposed to be about giving consumers control over their data. But for community banks, again, I always go back to community. It's like being invited to a party just to watch through the window. So the rule claims to exempt us, but that's just code for sit this one out while the big banks and fintechs eat your lunch, right? Going back to the Chimes and the Capital One and Discover. Now, if the CFPB wants to vacate this rule, let's not act surprised. The whole thing was a mess from the jump, and that's again just me being super transparent. Cost through the roof, tech hurdles higher than Snoop Dogg at a reggae festival, and no real value for the little guys who actually know their customers' names. Again, from a branch perspective, I can speak on this. So vacating 1033 isn't just about dodging a regulatory bullet. It's about recognizing that you can't build a future for community banking by locking us out of innovation or drowning us in compliant costs. So if the rule gets tossed, and I want to pick your brain a little bit more as far as like when this is forecasted to happen, because if this gets tossed, maybe we can finally have a real conversation about open banking that doesn't treat community banks or credit unions for that matter like the punchline to a bad joke. So I think about, you have these niches, and these credit unions or community banks, they're thriving in their niches for those who are thriving because of fintech partnerships. So I don't know, if you kill the folks who actually care about Main Street, then who's left to serve the community?
This is another sticky situation, Stacey, because I think there are too many consumer advocate types who oversimplify this whole 1033 rule and regulation thing as giving consumers control over their. We have control over it. Yes, the banks don't want to do this to a certain extent. But Simon Taylor, one of the leading fintech influencers in this space, I saw him present. God, it must be close to 3 years ago already at MX's conference, where he said and showed open banking is already bigger in the U.S. than it is anywhere else in the world. We just don't have the regulatory whatever the rules and regulations that force it to happen. But if you look at the actual interaction/transaction volume, it's already bigger. The other thing that just gets me about this, so I don't buy the whole give people control over their money. Most people don't want that, can't even manage it. And yes, I hear from the folks on LinkedIn, oh, don't worry, Ron, other fintechs will step in to give people those capabilities. No, everybody's going to step in to limit those capabilities because that's what's advantageous to them.
But what about like the financial literacy or budgeting apps like Mint, right? Like there's just so much value with open banking, being able to get a decision, a loan decision by being able to integrate, a consumer's banking and being, auto pay or whatever the case is, if they're applying for a loan. I know you mentioned something along the lines, Ron, at least this is the way I'm interpreting is, having all that data there, and you say it in the what's going on in banking report too. Like, okay, what about this data? A lot of people don't have the knowledge, so to speak, or that financial literacy. And again, I mean, if I can have $1 for every time I say community or community bank or credit union on this show, I think I'll be super duper rich. But this is what these grassroots shop they're doing, and they're providing financial literacy. So I think that on a broader scale, there, when you say, and correct me, but when you say a lot of people are not maybe literate to this, or it may not be advantageous, there's a good fraction, and I can't cite my sources now, that due to these budgeting apps and due to all this integration, because of Rule 1033, they're becoming much more financial literate, right? So we don't know what's going to happen with the new generation, and what's going to happen from now to 3 years from now. But I'm scared. Because if you think about even 1033, and putting more money in the banks or the big boys' pocket, it's already being done. But what we spoke about with Chime and with Discover, so there's other ways around it, while still being able to provide these opportunities from a community perspective.
Yeah, Stacey, I want everybody who's listening to this to be I want to be very clear to anybody listening to this what my take on this is. Because I believe 1033 was probably the only thing in the last 10 years I thought the CFPB did right. We don't have to get into the discussion of all those other things. But what I push back on is this view from mostly from the consumer advocate and fintech side, that this is some panacea to handle and deal with all this data transfer. What I think is going to happen is, it would happen as a result of this, and this is why I kind of push back a little bit on the 1033 rule, is, okay, so I'm a lender, and now I got all this 1033 and all this open data, open banking aspect, and Stacey Bryant comes to me and asks me for a loan, and I'm going to ask for every little certain piece of information about Stacey Bryant's financial life, which now is very easily transferred. All you have to do is push a button and say yes. And you're going to say, but why is the Bank of Ron asking for all this information? But if I don't get it, I'm not giving you a loan, Stacey. And so now we have a reverse problem of too much information being transferred, not necessarily the right information. And that's part of the challenge I have, is that we're just opening up the rails of information, but not providing any controls and bumpers and guardrails on this movement of data.
I think in our previous episode, I said, when it comes to implementing anything and everything AI, and we'll talk about that shortly, but it's a test and learn phase, right, Ron? So when I mentioned the example of me being in the branch, me approving a loan, I'm having this member sobbing right in front of me, telling me their life story. So it helped me kind of create that those underwriting memos, so to speak, where I was able to make exceptions and approve loans. Isn't this the same case from a computer's perspective? If we want to use computer, if we want to use that pronoun, that they're wanting, and I'm not saying I'm an advocate for it, I'm just playing devil's advocate here. They're wanting all this information, to your point. Why do they want to know all this information? So that they can make the best decision. It's like their way of being human, no?
Totally agree. But we're not recognizing the potential, or for certain folks, are people who are advocating for this, are not addressing the potential that there is this opportunity to go too far in
Right.
collecting the data. And here's the other thing too that just drives me nuts is the banks, and particularly the community banks and credit unions that we talk a lot about and we talk to a lot, basically see this as a negative and don't understand, wait, this is an opportunity to actually know their customers better, or their members better.
Right.
I have this argument a lot with credit unions, Stacey, who want to believe that they know their members better than anybody else. And you kind of alluded to this yourself a little earlier ago, where, you worked in the branch and you knew their name and you knew their kids' names and where they went to school. And I would argue that's nothing. You don't know their financial lives. You don't know the challenges they have with their financial lives, where their preferences are, where their investments are, if they even have investments. And now we're opening the door to oversharing some of this and having too much of that information being shared, which people will do if they think that, well, that's what's going to take for me to get the account open or for me to get that loan.
Ron, I knew everything that was happening in my members' life. I asked the appropriate questions. But I know we're just about to wrap up. Can we talk about just throwing AI terms, and we're out on these conferences? You have been on the road and folks are saying, hey, yeah, whether they're gloating, but I have AI and, in my shop, and, I have open banking, I have embedded finance. And it starts kind of like twitching because it's becoming, you mentioned this earlier, and I think you quoted a Paul Newman movie. What we have here is failure to communicate. So there's a lot of like, I'm using AI, I'm using embedded finance, but it's now sounding like pronouns. Like, my daughters are telling me a story, and he said, she said, they said. Who is they? Who is he? It's like, what AI are you using?
Yeah, I had vowed last year in a LinkedIn post that I was never going to use the term AI ever again, because it was an umbrella term for a lot of different technologies, machine learning, conversational AI, generative AI, now agentic AI. And now, as bad as that is, oh my gosh, the overuse and misuse of the term agents and AI and agentic AI. And even I'm not even going to mention his name. He's one of the most respected, the bankers I respect the most. I think he's one of the best writers out there. And he even started throwing around the term agentic AI. And I'm looking at it and going, no, that's not right. That's not the definition. But this is a huge, it's not just an AI problem. Stacey, go ask 10 bankers what onboarding means, and you're going to get 10 different answers. Yeah. Ask 10 bankers what open banking means, and you're going to get 10 different answers. Ask 10 different bankers what personalization means, and we've been using that term for 30, 40 years. And then social media is such a promoter of an accelerator of this problem, because now everybody just posts stuff willy-nilly. But we really got to start reining in our use of certain terminology. And I do think that at the individual bank and credit union level, I tell this at almost every board meeting I talk to, it's like, stop using the term AI and start using the individual technology terms.
I think, you know what, Ron, you're from New York, right? You're originally from New York. I'm born and raised in New York. I don't think I'll ever get tired of saying that. And it's funny, when I moved to New Jersey years ago and people started saying good morning, initially, I'm like, what do you mean good morning? Like, who the heck are you? Like, good morning? Like, what? And I think that when we hear AI, it's like, what the heck is AI? Like, what about it? So instead of saying stop, let's start challenging each other. We're out, whether it be on LinkedIn, conferences, what have you, when these folks are mentioning AI or these buzzwords, right? And even on demos and vendor demos, it's like, oh, this has AI. Okay, what is it? Can you tell me more? Like that. I think that we should challenge each other from the gate and let's start that norm. Let's start that culture. Hashtag challenge AI.
I like it. And what we should do is future episodes, let's take let's identify some of these terms and like drill down on them. Yeah. After we talk about some of the hot stuff. But I'm watching the clock, and we like to keep this into a certain manageable time. So thank you, everybody, for tuning in to this episode of What's Going On in Banking, and we look forward to talking with you in another episode.
Thanks, Ron.
See ya.